Hello everybody. So today I want to make a quick video about Tesla's Q4 and why I am pleased. So early January, I commented on the car deliveries. The growth is back. Feel free to look at this chart again from early January. These are the delivered numbers. You can see that the low point was really Q1 of 2024. The sales of the cars are back at Tesla. And even though some of the headlines are negative, you know, these Wall Street analysts, they're disappointed. Oh, Wall Street analysts are disappointed. In my view, this disappointment is very much manufactured, because who gets to set the expectations? Well, the analysts. They set their own expectations, and if you set them a little too high, you're going to be disappointed. My expectation going into this quarter have been met. They've been exceeded, actually. I'm very pleased with what I'm seeing. When I look at the revenues, the growth is back. Remember what we were facing a year ago with Powell, right? And the interest rates. But no, the growth is back. Total revenues grew 2%. And the media is going to nitpick, and it's only going to report on minus 8% for automotive, and entirely ignoring a more than a doubling in energy generation. If this keeps growing, if energy generation and storage revenue keeps going, you could have this part of the business be as big as automotive within, say, a 2-year period, if it keeps doubling and doubles again on top of that. Going on, what I care about on this channel is obviously EBITDA margin. Why do I care about adjusted EBITDA? Because it's the best proxy for cash flow. I don't consider GAAP earnings to be a good proxy for cash flow. GAAP only inform you on what you're going to pay tax. They don't really inform you on how much cash the business is retaining. I always compare my stocks based on adjusted EBITDA. And what do I see? I see it increased. It moved from 15% in Q4 of 2023 to 19.1% adjusted EBITDA margin in Q4 of 2024 for a company in the auto sector. This is outstanding to me. I love seeing that adjusted EBITDA margin being so high, nearly 20%. Also, a few reminders when judging Tesla. The valuation, the 1.2 trillion-ish in valuation right now, probably more now that the stock is at above 400 again. That trillion-ish valuation for Tesla, it's not because of the auto business. The auto business is not responsible for the valuation of Tesla. The auto business explains very little of that valuation. If you see Tesla as an auto business, you'll see it as overvalued. That's a point number one. Point number two is I really fundamentally believe that the growth in automobile can only be judged in 5 to maybe even 7-year cycles. How many reports have we seen of people just keeping their cars longer and longer? The gas car makers, they've been improving how they make cars today. If I look at my own gas car, I want a Tesla. I really want to buy one real bad, but my car is from 2016 and it runs just fine. It's got no issues, so I have no reason to change it. And that's the problem. One day I might get mad and just go buy a Tesla, but I have no reason to go buy a Tesla. How many people are in my situation where they just have a perfectly fine gas car? That's why this market has a very long sales cycle. You go change your car typically when your car really starts running into problems, and that's going to be a 10-year-old car when that starts happening, right? A car less than 10 years old that's built in the modern day is typically not going to have issues unless you buy like a Dodge Neon or something. So that's the point. The auto can only be judged, in my view, over a very long run, maybe a 5 to 7 years sales cycle. So now that I've put that out of the way, let me tell you what I loved this quarter. I loved a lot of things this quarter. First of all, when I look at the market share by region, I see that Tesla is not losing market share. It's roughly flat, even increasing in China, slightly dropping in Europe, flat in US, Canada, maybe a little down, but barely. The competition, which is now here, the competition has been here for 2 years, almost 3 years. The competition has barely made a dent in the Tesla market, share. And if the 7,500 tax credit is removed, what do you think is going to happen to the competition? They're going to lose the tax credit. The only company left in the business is going to be Tesla, making money at least. I don't deny that they could continue losing money, but they're going to be the only ones left making money. Also, very important, Tesla Semi is in pilot production. they've started with production. So as far as car goes, market share of cars and the development of cars, there's a lot to be pleased about. I'm also pleased to see the Cybercab is in development. The Roadster, whatever. I wish they dropped doing the Roadster, but they probably want to do that for, I don't know why they're doing that. It's a niche market at this point. But anyways, that's fine. One day maybe it will be done. Moving on to FSD, if you look at their miles driven, it keeps going up. You need to have more data. This is new data coming into the business, coming into the AI. The AI gets better at driving, the more data is get. FSD continues on its way to accumulating more data, and if you look at the cumulative miles driven with FSD, it sure looks like an exponential to me, and I expect this to get even steeper in the coming quarters, which means that in my view, FSD will be solved. No financial advice, of course, but we're getting close. Another thing that I love this quarter is the average cost of goods sold per vehicle. We are now just under $35,000. Each car sold is just under $35,000. I suggest you go look at how much a Tesla sells near you, and you'll see that it's a brand new Tesla costs much more than $35,000. So we see that nearly 20% EBITDA margin. We see it reflected in the cost of goods sold per vehicle, just going down and continuing to go down. The Cybertruck, I am pleased to see that so many things that they invested in the Cybertruck is going to be reused in other cars. There's really only two techs that are not going to be reused in other cars, things like the stainless steel exoskeleton or the air bending manufacturing, but the rest is a cross-pollination. The knowledge that they get from the Cybertruck is going to be implemented in all of the other vehicles, and I am pleased to see that used in future vehicles. The R&D, the cost of the R&D is being spread across multiple vehicles, not just one. I'm excited to see the Model Y, and of course, what used to be called the Juniper program. You know, a lot of people have been holding off on getting the Model Y because Tesla owners are in the know and they know the new Model Y is coming. So now with a new Model Y coming, some of that effect of people delaying their car, some of that effect is gone, and people are going to be able to upgrade. I believe the upgrade is going to renew interest into the brand and interest into the sales. And so I expect fully that new Model Y sales will be high. Another thing that I'm very happy about is the mega factory, what people in the space call the mega factory. That growth in storage that we've seen in the United States and in the West in general, we may see that same growth in China, because they are going to start making Megapacks, those $2 million storage systems for utility companies, for large stores, etc. We're going to see those being sold in China and being perhaps as successful in China as they are in the rest of the world. And this is very encouraging to see the mega factory being almost ready for production. And the last one, and I'll conclude with this, I'm pleased to see that they're going to start production of their own lithium refining in 2025. I remember it was maybe 9 months ago, there was nothing on that site in Corpus Christi, Texas. It is now almost ready for production. The fact that they can build this in less than a couple years is just outstanding. Industrial sites usually take decades to build. Tesla was able to do it in less than 2 years. I find that absolutely outstanding. So there's a lot of reasons why I'm pleased. There's a lot of things that I love this quarter. I am in a hurry. I am going to run to listen to the conference call. So this was not financial advice, not investment advice. This is just entertainment. Please like, please subscribe, follow me on Patreon, follow me on X, and have a wonderful, wonderful day.